Welcome back to StoneHouse Analytics. It's October 20th, and today's market is showing signs of retracement across metals and forex majors as key for our bearish fair value gaps begin to cap price. We'll break down gold, silver, euro, pound, and Nasdaq, focusing on whether this is a pullback or the start of a reversal. Let's start with gold. After a strong rally from the 4180s, XAUUSD has traded into the 4-hour bearish fair value gap around 4,265. The reaction so far has been muted, with price really struggling to break the equilibrium level. This hesitation suggests some short-term exhaustion and a potential retracement toward the 42-42-42-20 zone is looking likely. It's important to remember that as long as the structure holds above 4,200, the higher time frame bias remains bullish. However, a failure to hold that level might signal a deeper retrace before we see any continuation. Moving on to silver, XAGUSD also tapped into its 4-hour bearish FVG near 52.5 following a strong bullish impulse. Looking at the charts, we can see rejection candles forming, which indicates a short-term pause in momentum. A retracement into the 51.8 to 51.5 range could offer fresh liquidity for the next bullish leg up, but that's provided the 51.0 handle holds firm. So for now, it's a watch and wait zone as we look for either rejection or continuation. Now for the euro, EURUSD is consolidating, caught between the daily bullish fair value gap near 1.163 and the 4-hour bearish FVG at 1.167. Price is struggling to close above the equilibrium of this range, hinting at possible range-bound behavior before any significant new displacement. Bulls really need a clean, decisive close above 1.168 to sustain momentum. If we don't see that, we can expect a retest of 1.162 before another attempt higher. Let's look at the pound. GBPUSD has flattened out just below the 4-hour bearish fair value gap around 1.347. After a pretty extended bullish run, this region is acting as a temporary ceiling. If price can't reclaim 1.3475, we might see a pullback toward the daily midpoint around 1.339. That said, the larger structure remains bullish as long as it stays above 1.335, so intraday traders can look for potential re-entries on liquidity sweeps near that zone. And finally, the Nasdaq US100 continues to hover inside its 4-hour bearish fair value gap between 24,900 and 25,000. We've seen repeated failures to break through this level, which aligns with the possibility of a short-term top. If sellers decide to step in here, the next downside targets are sitting at 24,600 and then 24,400. However, a strong daily close above 25,000 would invalidate that bearish outlook and reopen the path for bullish continuation back toward the 25,300 mark. So in summary, gold and silver are testing bearish imbalances after a strong impulsive rally. The euro and pound are consolidating under key resistance, and the Nasdaq remains capped at that critical 25,000 level. Keep a close eye on liquidity sweeps around these fair value gaps. The next major price displacement will reveal whether the bulls can maintain control or if a deeper retracement phase has begun. This has been your StoneHouse Analytics Market Outlook for October 20th. Thanks for watching. If you found this helpful, be sure to hit that like button, subscribe, and ring the bell so you don't miss our next update.